Hello, this is Mike Wade, and welcome to this TTR video featuring yours truly, Mike Wade, and Tom's Tools. Of course, stock and options trading has large potential rewards, but also large potential risks. You must be aware of these risks and be willing to accept them in order to invest in the stock and options market. Don't trade money you cannot afford to lose. I'm not offering any kind of buy or sell recommendations, no recommendations whatsoever. I'm here to offer you educational examples. Please don't construe anything I'm about to share with you as advice. All prices are in US dollars unless noted otherwise. Feel free to pause the recording and read the balance of the disclaimer if you so choose. In this video, we're going to talk about high probability bullish trading. So what do I mean by that? Well, it's a two-step process. I'm going to show you how to use Tom's Tools to find the very best bullish opportunities and then use a credit spread, a bull put credit spread for higher probability. So it's a really straightforward set of scans. Here is specifically the agenda. Our high probability bullish trading agenda is to use Tom's put credit spreads ranker. We're going to go out in step one and find the fastest moving bulls using the close percent change ranker. I'm going to take stocks from that ranker and then put them into the high probability bullish credit spread ranker. And then we're going to trade bullish credit spreads. So you can call them bull put spreads or short put spreads. All the same thing, but these spreads are high probability simply because of the way we're going to construct them. And then I want to talk to you, of course, about how to manage these credit spreads in the event they win and in the event that they lose. Let's hop into the software. First off, notice that I'm back tested to October the 1st of 2019. I want to show you a real world example using the scanners. So in step one, I want to find stocks that are in a bullish posture. So I'm going to go into, and you can do that a number of different ways, but I want to do it using close percent change. I like to find stocks that are moving up the most over the last 120 days. And I want to look for bulls, of course, and I'm going to look against the S&P 500. Those stocks are institutionally sponsored, so if they are moving up the most, then it's likely that institutions are behind that stock and the momentum is more likely to continue. So really all you do is come in, make sure you've got bullish selected, select S&P 500, don't mess around with any of the wizard criteria, hit your search button, and this is going to find the stocks that have moved up the most in the last 120 days. You can see the first one on Hasbro has gone up 36.8% over the last 120 trading days. All of these are over 30. You can see here the top 9 or so are all over a 30% move up. Those stocks, especially because they're in the S&P 500, are more likely to keep on going. So we like those. Now, how many of these do we take? Well, let's just go down here. Typically, I take the top 50. That's going to work. The top 50 have gone up 18.45% or higher. That's a nice solid move over 120 trading day period. So let's just go ahead and save and add the top 50 of these stocks that we just found to a list called My Stock List. So change this to 50 right here and then make sure My Stock List is selected. That's a temporary holding list, and then click Replace. After you've done that, the system comes back and says the 50% change ranked stocks were saved in My Stock List. So these are bullish stocks. These are stocks that are in a bullish posture over the last 120 trading days. So the next step is to pop those stocks into a new searcher. I'm going to go to Searchers, Single Strategy, and put credit spreads. You can call these bull put spreads if you like. And the first thing that we want to do is make sure that we're going to pass the bullish stocks into the scanner. So make sure you select My Stock List next to Stock List. And then I want to make sure my ranking criteria is probability of profit times return on investment. That's a really nice way to rank the best trades, the ones that have the best ratio of probability and profitability. So I'm going to hit my search button. Let's see what comes up here. It's a very fast search. Right down here we have our opportunities. We have the stock, various pictures. You can look at IV, IVSV, moving averages. For example, if I want to look at the moving averages, the 50 and the 200-day moving averages, you can see this one on Hartford is the stock is really in a nice uptrend. The 50-day average is holding. The stock is moving at a 45-degree angle. That is certainly a bullish stock. And then you've got the actual put spread. You've got the actual legs, the price of the legs, the amount of slippage, the dividend that's being paid, open interest, delta, IV, percentage of range, credit over max risk or return on investment. So this first one is offering a 58.73% return on investment with a 61.11 statistical probability of profit. Multiply those two together and you get a probability of profit times the ROI, which gives you a nice metric to sort considering both probability of profit and return on investment. All right, so that's a good one. I like the chart, but take a look here. You know, open interest needs to be at least 100 on both legs. So scrolling down here, you'll notice the first one that has open interest that's over 100 on both legs is this one on AMAT. Taking a look at the chart, let's see, the chart is also in a bullish posture. You can see the 50-day moving average is also moving up at about a 45-degree angle, and the stock is bouncing off the 45. So this one has been really bullish over the last 6 months or so. Let's go ahead and pull up the put spread on this, and you do that by clicking either of the leg quotes. That's going to pull you up into this credit spread. Notice what it's doing is we're selling the 50 put in November. This is a 31-day option, and we're buying the underlying put at 47. So this is a 3-point spread. We're taking in $1.08 of credit. Our risk on this trade is 192. The potential return on investment, or max profit over max risk on this trade, is 56.25%. Probability of profit can be seen down here as well at about 60, just under 60% probability of profit by the time the trade expires in 31 days. So this is a really nice looking trade. Look at the risk graph. You can see here that as long as the stock stays where it is or drops just a little bit, maybe down to this break even, that would be our break even at expiration. The stock stays above this gray line, this gray blue line, and we've got profit. Now, of course, we're expecting the stock to rise, and as it does that, this credit spread will devalue, allowing us to buy it back for less than we bought it. You can also let it expire worthless, provided the stock is above the short strike, which in this case is 50. So there's our short strike at 50, and there's our long strike at 47. This is a 31-day trade. Now, before I take this further, let's talk a little bit about how we can manage this. So there's two exits to consider. One is if we're right. If we're right on this trade, then the stock has gone up. And what that means is the value of the spread, which is currently 108 when I sold it, will drop. If I can buy this spread back for, let's say, 20% of 108, which let's just call that 22 cents. If I can buy this back at 22 cents, then I've captured 80% of the maximum profit. So you can do that. Put an order in to buy the spread back for 20% of what you sold it for. So let's say that's 22 cents. Put that out good till cancel. Now, in the event the stock drops, though, you don't want to be down in this max risk range here. So you could lose up to just under $200 on this thing. You don't want to play with that. So one rule I like to use is if the stock closes below the break even here, which is clearly specified as 48.92, the stock closes less than that, then close down the spread. Here's what the trade did on 10/24. That's just over 3 weeks after we got into the trade. And you can see here, the stock really gapped up. This spread is virtually worthless. This is the time to take it off. If you look at the bid-ask spread, you can buy this thing back for roughly a nickel, buy it back, close it out for a 53.6% profit. So there's an example of using Tom's tools to find really good bullish opportunities and then profit in a high probability strategy like a bull put spread. Here's what we did to find that opportunity. In step one, we used the close percent change ranker. We left pretty much everything the same. We did change the stock list to use as the S&P 500. We selected bullish. We clicked search, and then we saved the top 50 of those bullish stocks, the most bullish stocks, into my stock list by clicking replace. And then we took my stock list and we used it in step two using the put credit spreads ranker. We popped my stock list under stock lists. We selected probability of profit times return on investment, and we click search, and we then move through our results looking for those results that had the best open interest, at least 100 on both legs. All right, there you have it. There's a really nice, easy system using Tom's tools to go out and find bullish opportunities. Have fun with that. I wish you all the best, and I will see you next time.